Hi there, and welcome to today's episode of the Investor Dictionary. And today we're looking at a terminology that you've probably seen bandied around often in the financial press called PEs or PE ratios. Those are price earnings ratios. And price earnings ratios is just simply another way of expressing the earnings per share that we looked at the other day. And one of the things that I'll be looking at when I look at the price earnings ratio, especially when a company has just released a set of financial records, because in that way, because when a company, on the day the company releases the financial statements, there's an accurate figure as far as company earnings are concerned, which you can then relate back to the price of the share, and you can get a relationship between the price of the share and the earnings of the company, as normally expressed as a percentage. And now what I would be looking at is, if I look at a specific company's price earnings share in the share listing, what I'll do is I'll look at the other shares within the same grouping of companies. So if I'm looking at a bank share, for instance, and I'll look at all the bank shares together. If I'm looking at a real estate company share, I'll be looking at all the real estate companies together, and the same with gold mining companies, coal mining companies, oil companies, etc., etc. And the reason for this is you look at companies within the same industry, and if this share's price earnings ratio is telling you that it'll be able to generate you likely future earnings at an 8% income ratio, whereas everybody else within the same group of companies is trading, showing price earnings ratios of 4 to 5% earnings, then you know that this company that has just released a set of financial statements is likely to be generating you 3% better income than the other companies within the group. And conversely, if all the companies within the same type of industry balance out the earnings between each other, then it could also mean that this company with a higher percentage price earnings ratio could in fact have a share price that is undervalued compared to all the others in the group. So which means looking at the company's price earnings ratio, especially on the day that it releases financial statements, a very important thing to do. That's my take on the price earnings ratio. Post your comments and questions down below. Also, very importantly, if you like this type of video content, give it a thumbs up. If you don't like it at all, give it a thumbs down. That way I know what type of content to be putting out in the future. And also, last but by no means least, click that big red subscribe button as well. That way you can stay subscribed to my channel for all of the new videos as I post them on a day-to-day, week-to-week basis. Stay carved up for the win out there. I'll be seeing you next time. Cheers.